94% of retail investors make emotional decisions during earnings season. They either panic sell or blindly buy based on a headline. And almost none of them actually read the report. Today, that changes for you. In the next few minutes, you're going to learn exactly which 5 numbers to look for in any earnings report, where to find them, and how to understand what they're actually telling you, all in under 10 minutes. No finance degree required. Let's get into it. Every quarter, public companies are required to release an earnings report. Think of it as a company's financial report card. The problem is these documents can run 50, 60, sometimes 100 pages long. So most people skip them entirely and just react to the stock price moving up or down. That's a mistake. Here are the only 5 numbers that actually matter. Number 1 is revenue. This is the total money the company brought in during the quarter. Simple. But here's the key: you don't just want to know the number, you want to compare it to what analysts expected. That expected number is called the consensus estimate. If a company like Apple reports $90 billion in revenue but analysts expected $92 billion, that's a miss. Even if $90 billion sounds huge, the market will often punish that. You can find consensus estimates for free on sites like Yahoo Finance or Seeking Alpha before the report drops. Number 2 is earnings per share, or EPS. This is the company's profit divided by the number of shares outstanding. So if a company earns $1 billion and has 500 million shares, the EPS is $2. Again, the magic is in the comparison. Did they beat the estimate or miss it? A company can grow revenue and still tank in after-hours trading because EPS came in at $1.85 instead of the expected $2.10. That gap matters more than the raw number. Number 3 is guidance. This one is arguably the most important number in the entire report and the most overlooked by beginners. Guidance is what the company says it expects to earn next quarter. It's forward-looking. A company can beat this quarter's earnings by a wide margin, but if they say next quarter looks weaker, the stock can drop 15% overnight. That's exactly what happened with Meta in early 2022. They reported decent earnings but guided lower on user growth. The stock lost roughly $230 billion in market cap in a single day. Guidance tells you where the business is heading, not just where it's been. Number 4 is gross margin. Revenue tells you how much came in. Gross margin tells you how much they actually kept after the cost of making their product or delivering their service. It's expressed as a percentage. If a company has a 70% gross margin, they keep 70 cents of every dollar in revenue before operating costs. Software companies like Microsoft often run margins above 65%. A grocery chain might run at 25%. Neither is automatically good or bad, what you're watching for is the trend. If gross margins are shrinking quarter over quarter, that's a warning sign. The company may be spending more to make the same dollar. Number 5 is free cash flow. This is the cash a company generates after paying for everything it needs to keep the business running. Not accounting profit, actual cash in the bank. Companies can manipulate earnings through accounting tricks, but free cash flow is much harder to fake. Warren Buffett has said for decades that he focuses on owner earnings, which is essentially free cash flow. If a company reports positive EPS but negative free cash flow consistently, dig deeper before you invest. Now here's how you actually find all of this in under 10 minutes. Go to the investor relations page of any public company. Search their name plus investor relations. Look for the most recent earnings press release. The first 2 pages will almost always contain revenue, EPS, and free cash flow. For guidance, scroll to the section labeled Outlook or Forward-Looking Statements. For margins, look at the income statement summary. That's it. 5 numbers, 2 pages, 10 minutes. Here's the takeaway. Earnings reports aren't scary once you know what to look for. Revenue and EPS tell you how the company performed. Guidance tells you where it's going. Gross margin tells you how efficiently it operates. And free cash flow tells you if the profits are real. Master these 5 and you'll already be ahead of most retail investors. If this was valuable, hit like and subscribe for more investing insights every week. We break down complex financial topics into simple, actionable steps every single week.